Hello, traders. It's Melissa with Price Plan Profit, and it is our daily trade review video. In this video, I'm going to talk about how my favorite day trading indicator, the PMZ or pre-market zone, worked, as well as go over any trades that I personally took today, including a stop that I took today in BBAI. So let's get started. If you don't know, this cyan box that you see on the screen, it's on a 5-minute chart, and I'm looking at ES futures from today's price action, July the 29th, 2025. This pre-market zone gives me a bias for what direction I'm looking for the market to trade in at the time. When price is below the zone, I'm looking to go short, and price above the zone, I am looking to go long. Today's PMZ was very narrow, about 2 points wide, just shy of 2 points wide actually. So at the top of the zone at about 64.38.5, we had immediate resistance 4 points above. This has been the case for the last several days, so I warned the traders in the trendy trading room and SPX room to use caution, and if you get long above the PMZ, be ready to take quick profits at these targets. Now, we never actually got the opportunity to trade above the PMZ today. The trades were to the downside. So about 15 minutes after the open, you had a trade here down to first target, second target. The gray zone on my box represents a potential buy the dip zone. But what I look for in this zone is confirmation. I need to see price make higher lows and have an inside candle followed by a strong breakout candle. So when price pulled back into my buy zone today, I was getting lower lows. We did create higher lows, kind of a ledge right here at the lower liquidity chop level, but we really couldn't break out. The 5-minute EMA cloud was in the way, and bulls just didn't have it in them to get up and above there. So no trade long out of the buy zone for me during this price action. Then we got some sell signals here, and price started dropping slowly but surely, taking out these previous lows and creating lower lows all along. That made this buy zone for me today invalidated. I did not go long in this zone because I just didn't get the confirmation. But let's follow this short play below the PMZ. 1 target, 2 targets, 3 targets, 4. I could go on singing, but I'll spare you. You can see that this played very well down to the green zone on my chart. This is a demand zone. Now in here, again, valid trade is to look for confirmation with trendy turn signals. We actually got one here on this candle at 11:45. There was immediate resistance above this 64.12 level, but it would have been good for a quick 8 points up. Then price turns around again at this daily edge. What was support becomes resistance. We get sell arrows, and it was pretty obvious at this point that the market was just too heavy and we were going to roll back over. We did roll back over, making higher lows in here. So again, this would have been a valid place to go long and trim at the levels on the chart for some small but quick profits here. Now in this area at the upper weekly edge, I got really interested in potentially scalp trading SPX here. And I will show you on that chart what I did in SPX and exactly where I scalped it from for easy to $300 per contract with each scalp. So on the ES chart, though, we did roll back over from the upper weekly edge with trendy turn signals back down into the demand zone, made higher lows and higher lows again, and it just sat and chopped in this area until the end of the day. We came down, we actually wicked below that ever important 6400 psychological level, but we did close above there. So this zone is still on my chart for tomorrow. I'm actually using the bottom half of this zone, so 63.9825 for my buy zone tomorrow potentially. We will see. Now let's look at the NASDAQ chart and go over the PMZ trades on NASDAQ. NASDAQ gave a fake out, a little market manipulation, very, very classic market manipulation here in those first 15 minutes, 20 minutes of the market. What I saw right away, I had a target up here at 23,632 at the time. That was just a Fibonacci extension target because the market was making new all-time highs. What I'm talking about with this manipulation in the first 15 minutes, big money needs to create liquidation. And what they will do sometimes is right at the open, they will give you a big imbalance candle and then a small follow through, followed by a topping wick. And the very next candle engulfs not only the entire body of that second 5-minute candle, but it even goes down and tests halfway into the body of that imbalance candle. Right there, that is a signal that this is more than likely a head fake. We did get a trendy turn signal right here at my fib extension target, and you can see by the chart that it was indeed a fake out right here, creating some liquidity for big money. So then price push below the PMZ, my bias becomes to the downside. Any test of the PMZ is an opportunity to short. I also had a gray buy zone on the NASDAQ. The NASDAQ was a little easier to trade. Simply, it was never a good setup. We made lower lows all within this buy zone, so it was not a valid zone, and I took no trades, nor did I recommend to take any trades out of this buy zone, just using that confirmation method that I talk about. So once we got below that buy zone, we came down, we hit another target, and price actually came all the way, making lower lows inside of this demand zone. Then things get interesting. Right here on this candle, we made a higher low. We got a trendy turn signal and we got a nice size imbalance candle. Now, I did not take a long here simply because I was waiting for this candle to close to see if it was indeed going to be a higher low. But when it closed right up into resistance, and the risk to reward was not worth it for me to try to trade against the current trend of the market on this 5-minute chart. So I did not go long here. We rolled over again, came back to the lower daily edge. Buyers stepped in. We got the trendy turn signal. Same case as before. That candle closed directly at resistance. I did not take this trade. I know some traders in the room did at the lower daily edge with the trendy turn signal, and they were able to profit all the way to the top of this 5-minute cloud before price rolled over again, and we just sat and we chopped inside of this demand zone. Then towards the end of the day, it really looked like this thing was going to flush down and actually break through and invalidate this demand zone, but that did not happen. Buyers did step in, protected this upper weekly edge, and we closed above it. Now, what about tomorrow? Well, I don't know what's going to happen tomorrow, but I know that this upper weekly edge will be an important level again tomorrow that bulls will want to try to defend, and bears need to push price down and through this zone right here. Sorry. As far as trades that I took, I wanted to show you the SPX chart and show you where I shorted and why I shorted. It was all for scalps now. I was just scalping to my first area of support. So the first one that I took was right in here. Price had pushed up above the 38.2 fib, but not quite to the 50. My preferred area to short would have been 63.88 on SPX by 63.93. But when I saw this top here with a topping wick and a trendy turn signal, I was like, I'm not going to get price all the way back up to the 50. So what level could I go short? I decided on a break back below the 38.2 that was setting at the upper weekly edge, which is a playing field of supply. I decided that would be my trigger. So on this candle that broke down below that level, that is where I went short. I bought the 63.85 puts 0 DTE here. I went at the money rather than trading them out of the money since I was just scalping them on a 0 DTE. I took quick profits of $200 on that per contract on this candle here. Then when price came back up into this area of resistance, I jumped in again, the same strike, 63.85s, and was able to take nice profits here. I actually got out at the lower daily edge, which is support until proven otherwise. So I missed the continuation move down here, but I was running out of time, needed to get out of the trade because I had a session to do at Simpler Trading, and so I just went ahead and exited. I could have been more profitable on the trade to play it back down to the buy zone on SPX today, but I did not. Then after my sessions in the room, I came back and price was again testing this lower daily edge. What was support had become resistance, so I decided to scalp the trade again back down here to 63.73. Just a quick 5 points there and another 5 points here. I did not take trades off of this buy zone to the upside. I could have, but I just didn't want the hassle of trading against the current trend. So I stuck to my idea of just shorting at resistance, and that's what I did. I had nice 4 trades all to the downside, shorting from resistance. Now, let's talk about the trade that I was stopped out on today. I had placed about a half allocation of risk on BBAI as it pulled back into a demand zone. I got in the trade when BBAI was at $7.09. I set a very tight stop. The reason why is just because the market was extended and I didn't want to trade both of these demand zones in one trade. So I set a very tight stop of $6.83, so about 26 cents of risk. And this candle closed below my $6.83, so I lost about $40 a contract here on this trade. No big deal. I took my loss as was according to my plan, and I can look to potentially get into a new swing trade on BBAI in this zone. So that was a loss for me today. Again, about $40 per contract on that trade. I had a couple of trades that I was able to add to my full allocation as I had planned to. The first one is on Freeport Mackerman. I had started the trade up here on Friday, I believe, but I had a buy zone down here, this green zone that you see on my chart. And price came down here yesterday and actually made this wick low. And I was like, okay, if I get confirmation of higher lows, then I will add to the trade. So this morning we had a wick down and it was a higher low. I then went to a smaller time frame and I used the 1 hour chart to go enter this trade here. But you can see we started making higher lows and getting trendy turn signals when price pulled back and tested this 42.99 level. That is where I added to my trade to full allocation on that. And I will now trim up here near this monthly edge and weekly edge double stack at about 44.30, then 44.73. And I'm back to my original plan, then at 45.75 and targeting 47.99 by 52.61. So that is a trade that I was able to add to full allocation. And I also was able to add to full allocation on a trade I've been in for a little longer than what I would have liked to have been, and that's QUBT. QUBT has just been playing games inside of this demand zone. Today, after hours, it's down here again. But today I decided, okay, what I'm going to do is at the bottom of my zone here, when we start making higher highs or higher lows rather, I will go ahead and add to my allocation on this trade. And it was on an hourly chart, but we made this low, then we made a higher low, and again a higher low here. And on the 1 hour chart, we were getting trendy turn signals and also Momo reversal arrows. So this is where I added to full allocation. And now I will watch and see if we take out tomorrow this $15.16, this low here, I would be stopped out of the trade. I do commit to candle closes and will stop out with a daily candle close below 15.16. And that's the trades that I took today. I had that one loss. I had 4 wins on SPX scalps. I was able to add to a couple of my open positions. I have 90% cash right now. I am very limited as far as my exposure goes in the market. I am half allocated to a Delta Airlines position that expires in September. Then I have Freeport and QUBT that I just talked about. Both of them expire in August, the August monthlies. And then I have one contract of IBIT that on further weakness potentially in Bitcoin, I would be interested in adding back or adding to full allocation down here at 117,195 by 115,675. So that is what I did today. I hope you had a great day of trading. If you followed your rules, you traded with discipline, you had a plan, and you executed that plan, then win, lose, or draw, you had a good day. I look forward to seeing you in the next video.